Hey there, it's Trisha, and I wanted to go over Tuesday, August 11th. We use two simple setups that require confirmation on three charts before we take our entry. You can check those out at www.easyemintrade.com. I do want to remind everybody that the FOMC is today at 2:15, so definitely would be careful up until then. Usually suggest not trading after the morning session until after that comes out at 2:15 and the market quiets back down. But anyway, I just want to make you aware of it. Volume has been pretty light this week, but I did want to go over a trade that we took on Tuesday because I know that a lot of people have been asking about having the two different smaller tick charts. How can we make them work? And so anyway, I just wanted to point that out. We actually had a squeeze setting up here on our 200 tick chart, and the issue was that the bar right here where you see the green arrow on the chart all the way to the left was not closed yet, showing that the indicator would be in line to take a short. So we really had to wait for this bar to close to see if this was even going to confirm that we could take a short. So by the time this bar closed and we had that confirmation, the squeeze had passed. It was already, it was long gone. So then if you look over to your 512 tick chart, we had one just getting ready to fire off. So everything was in line. Our trend indicator was saying we could take it. Our indicator here was saying we could take it. We're closed below the moving averages, so we're good to go. Everything's good here. So we got in at 992.75. And so basically we're going sideways, not going anywhere. And I wanted to point out, now we always start with a 2-point stop, and I've said in the past that what we'll do is we start with a 2-point stop, but our intention is if the trade doesn't look like it's going to go in our direction before we get a profit, then we'll flatten and cancel. So this is a perfect example. We got in, we have our 2-point stop, and oftentimes people are saying, well, how do you know when it's going against you? How do you know you should get out? And so for me, what I like to look at is when I get my indicator crossing back over against the direction that I'm going in. Like for long, you want the green to be above the purple. So obviously we're sitting here short. So when you see that, that's a good time to flatten and cancel. You can always get back in. That's what you need to remember, is that you always can get back in. Also, another sign is you can see price going down. We have lower lows here, all while our indicator is moving higher. So that's divergence, and typically that's going to lead you to believe that you're going to have to sit through a bounce. It doesn't have to be a big bounce, but it could be a bounce just big enough to take out your stop. So when we saw that yesterday, we flatten and cancel for a 1.25 point loss. Had we sat there waiting to see what was going to happen through this, we would have been stopped out. And eventually price did go down, but it took a really long time before it went down. You can see over here on our longer tick chart, this is the bar we got in at, and this is, we went sideways for quite a while before it finally dropped. So again, I would never sit through that waiting and waiting. I would always just look to re-enter. And typically what we're doing is we put our stop in for 2 points. On these lately, what we're trying to do is just get a point, then move our stop to our entry, and then look for our 2 points, and then we can trail stop our remaining third. We're exiting in thirds. In this case, our first target was only going to be 3/4 of a point because of the floor pivot right below us, and we just never got there. So that's just the way it is. But we turned a 2-point stop basically into a 1.25 point stop by watching for divergence. So I hope that helps, and you can check those out at www.easyemintrade.com.